Back in the days, it was an event to go for a shopping. Back in the days, it was an event and it was a wait period for even sending a mail or a courier. So we have to wait for more than 15 days, even for 20 days, or sometimes it is more than even a month. But today's time, it is the era of mail or email or of WhatsApp, where we have to deliver the things then and there. And in today's time, we don't have that patience. So if we are talking about the previous days when you are going to shopping and doing other things and taking out our own things and selecting those, now we are selecting in our screens. So the commerce segment came, and the commerce as e-commerce. So you are selecting your products in your computer screen and the product is getting delivered at your place within 7 to 8 days. But now what? Now we don't have that much of patience even. Now we want our things, what we have selected, to be delivered in next 30 minutes. We became so quick and we have lost our patience like this. So in this impatience world, today we need everything in our hand, quick, what we are trying to get and selecting for us. So there we come, the commerce as quick commerce. Previously it was e-commerce, things were getting delivered at your place in 7 to 8 days. Now we are expecting even our iPhone to be delivered at our place in 30 minutes. So what is this quick commerce segment? So hi, this is Indranil and you are watching The Spotlight Decodes. In today's The Spotlight Decode segment, we are going to decoding the business model of quick commerce. What is this quick commerce? What is the need of this quick commerce? And we will also compare few quick commerce platforms and their products and their pricing, and what are the differences of the same city, same products having different prices. So we'll try to understand the quick commerce as a business model, who are getting benefited out of it and who are losing their portion. So in this decode segment, please watch the entire video so we can understand the quick commerce proposition as a whole and as a business model. If we talk about quick commerce, it is one segregation of e-commerce. Previously, we were all having the e-commerce where Amazon, Flipkart was ruling. So there you are selecting your products and the products was getting delivered through their courier services at your place within 7 to 10 days, or sometimes it is taking even 15 days. So now the quick commerce came. The concept of quick commerce was invented by a food delivery platform, and it was just a trial to deliver some grocery item at your place within 15 to 20 minutes. So the trial became a business model nowadays, and it is the most attractive business model for multiple companies, and even for the investors who are sitting at US, they are also looking at us. So what is this business model? The quick commerce model is you have a platform. And in this platform, majorly it was started with the groceries and vegetables and fruits. And for groceries and food, you don't want to waste your time much, and you don't want to waste your petrol cost as well. So you are not minding to pay even some amount more to get your groceries and fruits and vegetable at your place within 15 to 20 minutes. So if you are a shortage of some item at your kitchen and you are just ordering those items, your item will get delivered in 15 minutes by the time your kitchen is ready. So that was a concept of this quick commerce. It was previously only segregated in the groceries and fruits and vegetables segment. But now what? Now it is not segmented into that segment. Now it has vast with other products as well. So in present time, quick commerce is also delivering white goods. They are also delivering electronic items at your place, and they are planning to deliver it within 30 minutes. Before moving to the next part of this video, I just want to address about today's sponsor. Today's video has been sponsored by Hexter Learning. Hexter Learning is India's first creative learning studio for teenagers, and anyone can enroll between the age of 8 to 25. In Hexter Learning, they have courses like 2D animation, 3D animation, motion graphic, video editing like courses, through which people can emphasize more into these kind of sectors and more into these kind of segments, and they can create a difference with their content or with others' content as well. Hexter Learning also provide internship programs so that students can have better understanding that how content get created, how they are edited, and how they are visually impactful to the world. We have mentioned their link in the description box so that you can check their full details and their courses, and you can also enroll into their courses by availing discount of 30% only by mentioning the Spotlight Decodes. So please check once on the description box on their link and just visit their website so that you can understand what are the things are there for you. Let's discuss about this quick commerce as a business model. What is this business model of quick commerce? Quick commerce is basically a platform. So if I talk about or give an example of quick commerce in India, presently the leading quick commerce companies in India are Swiggy Instamart, Zomato Blinkit and Zepto. And other brands like Big Basket, they are also coming into the quick commerce. Flipkart with their Minute, they are also coming into the quick commerce. Amazon is also planning for the quick commerce. So now we'll be having at least half a dozen of quick commerce companies. So what is this quick commerce? Do they have any shop? Do they have any establishment? Their establishment is the platform through which you order your items. What they need to have? They need to have dark store. What is this dark store? Dark store is a small warehouse kind of a thing what they need to develop within the radius where they want to deliver the products. So now if you compare the warehouse or a dark store proposition in terms of business model, so the warehouses previously were situated far away from the city. So if a 1 lakh square feet of warehouse was costing 1 lakh rupees as a rental, so now the same amount of rental quick commerce companies need to pay for their dark store because they have the dark store within the radius of a locality. So the cost of their rental is automatically very high. So this is their establishment cost that they need to bear because they have to procure every single item at their dark store from where they are going to deliver at your doorstep. Let's understand the quick commerce business proposition. So first, they need to develop or they need to have dark store. So that is their investment or expenditure. They need to have their manpower to manage those dark stores and a manager to have an availability of their products. Second, what? Second, they need that platform to be updated every single time. So that is their biggest investment because through their platform, you are ordering and they are delivering, they are tracking everything. And third thing is that they want gig workers. Who are those gig workers? Gig workers are those who are delivering your selected products at your doorstep and they are freelancer. They are not with the fixed operational cost for the quick commerce companies. So quick commerce companies have fixed operational expenses as dark store, the operational staffs of the dark store and managing the platform through which you are ordering the products. What are the variable things? Variable things, the person who is delivering, they are not on their payroll. So the product you are selecting to get delivered at your place, you are paying certain amount for that. Or the quick commerce company is charging certain extra amount from you and through which they are paying the gig workers as a commission. So they are not their employees, they are their commission agents and sometimes they call it partners, sometimes they call it some other designation so that there should not be any other legal entity to be created. In present time, the statistics says the average order value for any quick commerce is not more than 500 to 600. So whatever you are ordering for the quick commerce platforms, that is costing 500 rupees. So anything that comes under grocery, fruits and vegetable, what the percentage of margin that you are expecting? Not more than 5%, sometimes only 10%. So that is the maximum price margin that a quick commerce company can make. So 500 rupees order can create 50 rupees for the quick commerce company. Is it a right kind of business where 500 rupees give them 50 rupees and they need to operate so much things and they need to maintain so many things? Is it a business feasible model? Not rightly. So what they need? They need it in a volume. They need 500 multiplied by lakhs so that they can create 5 lakhs or 5 crore orders in a day. So it is the game of volume. So entire quick commerce segment, entire quick commerce business is depending how much volume they can create. So bigger the volume is, they can create certain amount of money in their business through which they can maintain all their operational cost and everything to be sustainable. As a consumer, what kind of products you are looking for the quick commerce platform? You are looking for breakfast cereals, you are looking for bread, you are looking for milk, you are looking for butter. These are the products that you are looking for. So the major companies are manufacturing and supplying to the quick commerce dark store so that you can get those products at your door space. In that scenario, the company only can generate 4 to 10% of their margin because these are the products that you require on a daily basis. So the margin is always very low. At the same time, quick commerce companies are trying to acquire or trying to show you certain products who has been generated and given to them by local suppliers, where the margin is higher and they can bargain with those suppliers to generate some extra margin. That is more than 10%. Sometimes they squeeze the proposition up to 30% or 40% so that they can generate certain amount of money by selling those. These are the products always pushed by the quick commerce or any of these platforms to you, so that you get attracted by the offers or you get attracted by the percentage of discount, because they cannot give much of the discount from a product like Amul butter, but they can give a much better discount from a butter manufactured by any local companies. So there they can offer you some discounts, offer you certain 1+1 or anything else, so that you can get attracted by those offers and you order those products, and quick commerce companies can make certain extra margin out of it. Who are the quick commerce consumers? Quick commerce consumers are belonging from the upper middle class who don't have much time. They are spending much of their time on their work and they cannot go for shopping frequently. So those are the people. So they have stopped going to the local kirana stores for these small things, what today they are trying to get at their place within 15 to 20 minutes by this quick commerce platform. These are the people previously who were going to malls on all these departmental stores to gather their groceries weekly or bi-weekly. These were the people who made Big Bazaar so big. These are the people who made all these departmental stores big. In today's time, if you even go to the departmental store, you will be not finding that kind of rush what was previously was happening on Saturdays or Sundays, or back in the days 26th of January by Big Bazaar, where there was a big queue of around 1 kilometer long to get the discount. Now the third portion, that is the product suppliers. So product suppliers are the companies. The companies are like HUL, the companies like Procter & Gamble, Britannia. These are the companies who are providing these products to the dark stores or to the quick commerce segment. So now when the products are getting procured from these kind of companies, the margin is very less. Margin is not more than 4 to 5%, and sometimes it is 10% only. So they also try to get the products from the local manufacturer, or some products which they are called as healthy, or some as a different segment they want to create, so that they have these suppliers as well along with the products people are looking for. So if today you are trying to get biscuits, you are having an option of Britannia, and at the same time they will be pushing some healthy normal atta biscuit as well. So now for the local vendors, it is their basic requirement today to be visible in these platforms, because big companies, they don't want this platform to get visible with. They are more into penetrating the rural India, because their brands are well established. So the local vendors, they need their presence, and where the presence will be? The presence will be in this e-commerce platform or in the quick commerce platform, so that people can see these are also the companies and they also sell these kind of products. So for them, it is very important to be visible. There is the collaboration and there is the bargaining. So quick commerce, to get their product listed at their platform, doing all kinds of bargaining to get certain extra margin to generate profits at least, because they cannot do these kind of margin to the Britannia or Procter & Gamble like companies. They are sitting and they are having already a big chunk of business which is going on. So what I did, I selected 6 different products from both the quick commerce platform for the same address to get delivered. Out of these 6 products, one is milk, one is salt, one is atta, one is dal, and another one is breakfast cereal, what people usually order from this quick commerce platform. So now the difference is, the salt of Tata company was having the 28 as their MRP. One company was selling it at 25 rupees, another one is selling at 27 rupees. The breakfast cereal is having the MRP as 370 in both the platform. One is selling at 277 and another one is selling at 314. So this is the kind of difference from MRP and their listed costing. So how they are making it and how they are doing this dealing. Now, after all these total entire product of 6 items, one company is showing they are charging 2 rupees as handling fee, and the other company is showing 5 rupees as handling fee. That means what they want to project. They are just trying to project that they are going to charge just 5 rupees for these 6 things to be delivered at your place in 15 minutes. And another company is just showing we will be charging only 2 rupees from you extra to get this thing delivered at your place within 15 minutes. no one will mind to pay 2 rupees or 5 rupees. So this is the gimmick. So now if I go for the entire cost, one company is showing 1089 and another company is showing 1066. So out of these 2 rupees and 5 rupees of extra charges, again there is a difference of 20 plus rupees. Now if today when we are shooting this video, that is 29th of September, one platform, that is Swiggy Instamart, is showing on their platform in the bold that they are the cheapest and the most affordable platform in today's time. So in this quick commerce game, being a consumer, you are getting benefited, of course, because you are getting your product, selected product at your doorstep within 15 to 20 minutes of your time without costing your petrol cost, without having your time cost. So you are beneficial. So now who are these quick commerce companies and how they are making money when they are saying it is a business model? So business comes on profit and loss. Business cannot be without profit and without loss. So if I talk about this quick commerce, by generating 10% of the margin of your product, no one can generate profit. And no one can generate profit, it cannot be a business. So the quick commerce business is totally the volume game. And in today's time, every single quick commerce company, if I talk about non-listed at present time, because only one company, that is Blinkit, has been listed and they had registered profit. Remaining all other companies are in loss. Why? Because quick commerce is totally depending on the funding, that how much money they can burn in terms of their proposition of business investment. So as a quick commerce, they are just trying to grab the volume, because if 1000 rupees will generate only 100 rupees to them, they cannot meet out their operational cost. So they need to play the volume game. So if this 1000 goes to 1 crore, they will be generating 1 lakh. If they will be getting this 100 crore, then only they will be generating something. So this is all about volume game. So now the role of investors come. Every quick commerce companies, they are approaching to investors and they are just showing the volume, that how much volume they can create in a month. If we talk about the quick commerce volume game, so they are just projecting what kind of volume they can create by having their presence in different market and the potential of those markets, and they are generating their valuation to 1 billion and up to 5 billion as well. So when a company who has just incepted 6 months or even 1 year back, they are having a valuation of 5 billion US dollar, so obviously the major investors are getting attracted and at least they want to try to understand what is this volume game is all about. In today itself, Tiger Global is the company who had shown their interest on a Zepto-like company, and they are evaluating their dark store model in Bangalore city. So even these kind of companies are trying to understand this entire model so that they can give their plan, they can give their expertise to come with their IPOs. So now what is this IPO? We will be discussing in detail about this IPO ball game as well in another video of us. Today just we want to understand that why these quick commerce companies are rushing towards their IPO. Because at present, every single investor is putting their money to burn. So the money they are getting from investors, they are burning it and they are just finishing it. How long? Till how long a company can burn, and till how long an investor can infuse money on the same company. There is the role of IPO, and there is the need to rush to that IPO, because the moment it comes and it will operate or open their IPO, public's money will come to the company. And once public money will come to the company will be on a sustainable model so that the initial investors can get their exit, because through the investors, these companies cannot survive. So they need public's money to constantly getting the funds from outside so that they can burn or they can make this business model feasible and sustainable for the market and for you like people who want their product to get delivered in 15 minutes. Because once a product is getting delivered to your doorstep within 15 minutes, it incurs cost. And that cost in multiple things. It's the cost of the product, it's the cost of the maintenance, it's the cost of the warehousing, it's the cost of the commutation, it's the cost of the manpower who are involved, it's the cost of the person who was delivering the product to your doorstep. So there are multiple costs that need to incur. Even if you are asking for a $200 product at your doorstep, it has the same cost almost when you are asking for 1,000 rupees product. So bare minimum ticket size will incur the major cost. So till the time they are not reaching up to an average ticket size which is more than 1,000 or 2,000, they never can be profitable logically. So there is the point of quick commerce profitability and business model, and that we need to understand, and there we need to decode this business model. Now, if I summarize the quick commerce model, it is a model which is a part of the e-commerce segment. Why we name it quick commerce? Because platform is almost same like e-commerce. E-commerce is operating through a large warehouse. Quick commerce is operating through dark stores, which are small warehouses, but the problem is these dark stores are situated in locality, in the mid of the town, so that they can cater your locality or your house within 15 minutes of commutation. Where in warehouse, this restriction is not there. It is outskirts of the locality, and the people coming from that area, it's a bigger area. So the cost is higher from that warehousing model. So this is the difference. Other difference is now quick commerce platforms are trying to sell almost everything you were previously seeing in an e-commerce platform. So once their market or once their product portfolio is larger, their dark store capacity need to be in a bigger one. So once they are going to have a bigger space in a locality, their cost will automatically go on a higher side. So again, there is a probability of loss. So you need to understand how much you can pay extra to these quick commerce people to get this product. Only then this quick commerce company can make money. Otherwise, it is all about burning how much money they can create. And that is the reason, if I talk about and if I give an example of two companies, one is Reliance. They were having quick commerce by the name of Reliance Express. Second is Tata-backed Big Basket. Now Big Basket, because of this rush of this quick commerce and this buzz, they are also trying to enter into this business. And these companies backed out from this quick commerce segment because they are not funded by the investors. Reliance is a promoter-based company. Tata is also promoter-based company. So they are the people who has to infuse money. There is no external funds. And that is the reason they understand the feasibility and logical aspect of this quick commerce business, and that is the reason they backed out from it. Once you have an approach to dilute your stake, that means you understand the business proposition, that without the other money and without public's money, this company can no longer get served. And there is the business model understanding. I hope we can clear a few of the aspects of this quick commerce business model. I hope with this decode segment, you can understand the quick commerce proposition as well. So for these kind of business content and these kind of business model decoding, please subscribe our channel so that you can have ideas that how these business models are met and how these business models need for IPOs, pre-IPO sessions and all these. We will try to make you understand the little bit differences of the business model and the aspect of this business model, so that when you are going to develop or you are going to make your own company or certain business, you need to understand where you are going right and where you are going wrong, and how you can make it more feasible, more logical and more viable as a business model. And please don't forget to comment in the comment section so that we can understand what kind of content you are trying to get from our site and how we can improve ourselves.